Hi there, it's Bill with Smart Trades, and it's Monday evening, June 14th, and going to take a look at a couple of markets here, including and starting out with the Russell 2000 index. And as you can see here, the diagonal triangle or type 2 diagonal triangle that I had mentioned in the last report looks pretty clean in the Russell. You can count 1, 2, 3, 4, 5. Within each structure, a pretty clear 5 waves down, with the exception of that first leg that, again, I've looked at as a possible failed fifth. But anyway, you can see how the lows line up very clearly, and you've got 3 touch points for the trend line there. Also, if you will note, although volume did kick up initially, it's actually diminished on the decline, which is interesting for a variety of reasons, which I'll get into later. But first, let's go over and take a look at the S&P. And on the S&P cash, a little bit of a different story. I've heard other folks have looked at this as a diagonal triangle too. However, they're not really lining up the trend lines. As you can see, if you connect points 1 and 3, not only are we not reaching that level, but we haven't even made a new low. So if indeed you count this as a type 2 diagonal triangle, you've got a failed fifth. The implications of that are actually at least short-term bullish. They indicate the market obviously could not make a new low, and usually imply a rally, which to some extent we've already gotten. Also note again that the volume has actually declined on the decline, so worth noting that, because let's scroll back a bit. Let's go back to, here we go. This is the 2007 peak, and as you can see, volume actually increased on the way down. And I'd also bring your attention to the fact that on that diagonal triangle, that all the lows lined up with the lower trend line, again connecting 1, 3, and 5. One other thought too, there's a tendency for the generals to always fight the last war, so people look at that, perhaps that diagonal triangle, and type 2 diagonal triangles are fairly rare, but they'll look at that previous one and say, aha, we're doing the same thing. And one of the tenets of Elliott is that indeed we rarely do the same thing twice in a row. So and worth noting again that type 2 diagonal triangle, more often than not, is an A wave as well as a wave 1. So my take on this whole decline is that this decline is actually an A wave in a correction off of the recent rally. Something else to note here, check out the high up here on the 13th of May. You'll note there's no discernible gap on the S&P. A lot of folks use the S&P and note gaps in it. But there's a major problem with that. The S&P cash actually calculates the opening, including unchanged issues in the index on the open. So oftentimes markets that have actually gapped do not show up as a gap in the S&P cash. So if somebody's telling you, here's a gap in the S&P, and they're using the cash index as a means to see those gaps, they're probably missing half of them. And on that note, let's take a look at the spiders, and you can see here that this is the gap from the 13th, which actually occurred in the S&P and all the other markets. It just doesn't show on the S&P cash because of the way they calculate it. Let's scroll back a bit too. I want to note here that on the here again is that decline off of the 2007 peak with that diagonal triangle wave 1 down. And I want to bring to your attention that there's a whole bunch of gaps here that did not create a top. So gaps are obviously worth noting, and oftentimes you will have the market react to a gap. But in the case, for example, of that 2007 peak, the fact is that there were, in this decline, there were about 5 gaps, and only one of them produced a reversal. So put another way, the reliability of a gap as a turning point is only about 20% in this particular case. So we're thinking about when you're looking at gaps as a potential turning point. That said, certainly they are worth looking at, but you want to get further confirmation of a variety of things like price pattern, so on and so forth. Okay, let's skip ahead to the NASDAQ cash. And NASDAQ, by the way, is calculated with the, it does not use stocks that have not moved or are unchanged on the opening, so you do get better indications of the actual gaps on the NASDAQ cash. What's interesting here about the NASDAQ cash is that the decline after the first leg down, which we can count as A or you can count as 1, but for now let's just count it as A. You actually have higher lows off of that first decline back in May 6th to be exact. So from there you have a higher low on the 25th, and the recent low on the 8th is also higher. So no diagonal triangle there at all. In fact, one way to count this would be that you have an A down, and then we have A, B, C, D, and E. Indeed, a contracting triangle. The implication short term actually is quite bearish. If that is the case, the triangle would be broken if we penetrate through the top of C. But for now, that trend line has held very nicely, and so you have A down, triangle B wave. The implication, if indeed this is the count, is that the market is going to a C wave down or third wave down is imminent. Third wave being a C wave, not in the context of a impulse or 5 waves down. And on that note, one way that you could count the S&P so that it would fit into that scenario is that you count an ABC down. A to the low on the 25th. Again, we did not make a new low here, so you count this A, B down, and ABC of B, and from there we're working on a C wave, which may have a little bit further to go, but we should be alert to this possibility. Now, I don't necessarily favor that that's the case. I'm going to take this whole thing one step at a time. We certainly could correct more in an A wave. B waves are very unpredictable. They can correct, they could have shallow corrections, 38%, 23%, or indeed, as we had in the major B wave peak in the 2000s, actually exceeded the top of A. They can go, B waves could be 162% of A. So the extent of B is rather unpredictable, and we want to just be alert to when it ends, and indeed if it is even a B wave. So at any rate, we'll take it one step at a time. Anyway, hope you enjoyed it. Have a great day. Bye-bye.